My name is Cillian. I am a director in Deloitte, based here in Dublin. Pure coincidence, my hometown is Kilkenny as well. So I have kind of a bit of dual knowledge today working for me. We're going to talk today about a paper we've just launched. It's on your tables. It's called Beefing Up Blockchain. We started writing this paper about 4 or 5 months ago now. Where the genesis of the document came from was one of my colleagues, Joe, who's going to walk you through the paper a little bit later on. Joe keeps cattle over in Mayo. I have cattle with my brother-in-law down in County Waterford, which is the next county down. And we've been working in the blockchain space for quite a while, and we thought it was very obvious that there was a correlation between blockchain, beef, and some of the topics, in fact a lot of the topics we were talking about yesterday. As Joe and I sat down at the back yesterday, there was moments where we were definitely nudging each other and just saying, blockchain could solve that, blockchain could solve that, and we almost wanted to be like Jack in the boxes. But it's not a panacea. It isn't going to solve everything, definitely not by a long shot. But what we're going to do today is just kind of demystify some of the concepts around blockchain and what the technology is, what it does. Joe's then going to present some details from the paper, and then we're going to finish with a panel discussion. We have a great panel this morning. We have Aoife Connaughton from our team. Aoife is one of our key sustainability people, working with Department of Agriculture and some of the other initiatives in this country at the moment. We have John Colreavy, who is the head of Meat Technology Ireland, which is a science foundation here. And we have Rob Jennings from Beefchain, having flown in from Wyoming, where they're doing beef on blockchain there today. So, just take you through who we are and what we do. So, we have been working, as I say, in the blockchain space 3-4 years at this stage. We run the EMEA Blockchain Lab in Dublin. Deloitte has 3 global hubs for blockchain. One is in Dublin, which was the first. Then we helped them to set up in Hong Kong. And then we helped them to set up in New York. And we have some other spoke labs around the place as well. We do everything from ideation through to full deployment of blockchain technology. The first commercial blockchain that went live was by a company called DNVGL. They're a marine assurance company. They're based in Oslo, and we put that into production for them last year. So, as I say, everything from eminence, education, capability building, right through the build-out, solution development, etc. We're not going to go into too much detail on that. So what is blockchain? I guess everybody in the room has heard of it. A lot of people get annoyed by it. A lot of people are fed up with it because they've heard it so many times. But not a lot of people can fully explain the mechanicals of how it works or how it could work. And I don't think everybody needs to, right? The key point is that you all use the internet. Everybody in this room. How many of you know what TCP/IP is? How many of you know what HTTP is? You don't need to know how to describe it or explain it. But what would my blockchain vision be? It should be pure digital design, transformation, and innovation of value chains, and nothing else. It's just a technology then that sits underneath it. But we will describe what the technology is. So at its most basic fundamental level, the blockchain is just a network of computers, the same way the internet is. Okay? The only difference is that compared to the internet, the blockchain goes a little step further. And what it does is it shares and replicates the same ledger. So today, all the organizations in the room, so Cargill, Merck, Zoetis, you'll all be running your own ledgers. And when you want to pay each other, right, what has to happen? You've got to go to a bank, because that's where you're reconciling your value. You're paying into a bank, the bank is paying whoever it is you're interacting with. Okay, the difference here is that you're using that network of computers to share value as well as information. So if you think about it in your ordinary day lives, you're booking a flight, you're on AmericanAirlines.com or BritishAirways.com or AirLingus.com, whoever it is. You can get so far in the process, which is the last screen for payment. And what happens? You go out to that screen which is powered by MasterCard or powered by Visa. Because the internet in its current guise cannot facilitate the exchange of value. So what the blockchain allows us to do is, through this network of computers that are sharing this same ledger, you can move value across it, because you're just moving it across the same network. And the second thing is you can tokenize anything to be represented on that blockchain. So this clicker, I could tokenize, I could represent it on the blockchain. A cow, a liter of milk, a steak, whatever it is, you can tokenize that. It also allows us to transfer data, because it is a database technology, but it's a database technology on steroids, I suppose. And the piece in the middle is you can share an identity. So because you can tokenize anything, you could share an identity. That identity could be herd number, it could be a feed number, it could be grain, it could be whatever it is. Whatever you need to identify and store as value, you can store that on the blockchain. So how does it work? Well, effectively, it's just blocks of information. So there's blocks after block after block of information, and then they join together to create a chain. So the blocks are recorded chronologically. And once the data is put into them through what's called a consensus mechanism, they cannot be changed. So you cannot remove the data and change it and update it. So if you're running a database today, something like a SQL database, you can go in, you can write a script, you can remove information. You cannot do that on the blockchain. As soon as the consensus mechanism runs, that's it. It's immutable. It's locked in. Now, that doesn't mean that you can't amend a transaction. Yes, you can, but it just means that you have to facilitate an extra transaction if you made a mistake. Okay? The key point is that you have to have consensus. So today you've probably all heard of Bitcoin. So how Bitcoin works is you have consensus every 10 minutes, and that agrees if the transactions going into the blockchain are valid. How they do it is they run a mathematical test every 10 minutes, and this is called mining. And they run this test every 10 minutes, and if you're the first person with the right answer, you get 12.5 Bitcoin. So about $80,000. To have any chance of winning that algorithm today, you'd need a room as big as this, running a load of hardware, to even come close. Most of those mining operations are in northwest, southwest China. Huge hydroelectric dams, a lot of electricity available to people, and they can power this. Consensus gives great strength. So because you have this replication of the nodes in the network, in Bitcoin world it's 15,000, nearly 16,000 nodes. It's very, very difficult to overcome the network. So if you wanted to overcome it, you'd have to overcome 51% of the nodes, 51% of the network in that 10-minute window. To do that, you'd need the energy of Norway at your fingertips for 10 minutes for an entire year. The consumption of energy for a year at your fingertips in 10 minutes. Because that's the sort of computing power we're talking about. It's hugely inefficient. So they're moving to a different way, which is going to be based on financial reward. But what we would see in the paper, and we write about this in the paper, is we would see for industries like the beef industry, the dairy industry, the use of what they call a permissioned or a private blockchain. So you can have a private network as well. And this is where people create consortiums, clubs, and we could create those in the room. So we could create one, and we could say to have a valid transaction reporting to the block, we can use what's called proof of authority. And proof of authority is where we say, today Joe, my colleague, he's going to validate the transactions on the blockchain. If Joe says it's valid, that's it. We all agree. How do we keep Joe honest? We hand it over to the next person for the next block, and so on and so on and so on. And they're looking back on each other. So there's that loop. The second piece is that you can have another consensus mechanism, depending on the situation, called practical Byzantine fault tolerance. It's the rule of the generals. Okay? And this is 2/3. If 2/3 of the people in the room here agreed that a transaction was valid and took place, that's it. We commit it to the blockchain and we move on. And you don't have to put everything on the blockchain, not at all. You can encrypt data on the blockchain, you can mask data, you can use what's called cryptographic hashing. So you don't have to see data. This was a key point that came up with Goldman Sachs a few years ago. They write a lot of intellectual property and a lot of the licenses for blockchain. But what they did was they were really concerned that if someone figured out how they were using the blockchain, you could work out their IP, which is effectively their trading strategy. So what they do is they encrypt it. And it's very, very difficult to read. Okay, now quantum computing in years and years' time, maybe there's a bit of an issue, but that's a long way away. So as I say, that just creates then this block of transactions. So the first transaction you might have in there might be breeding, AI information, artificial insemination. Then you go onto the farm, you get your farm level data, you add that into the next block. The next one might be a feedlot, putting information into it. Then a slaughterhouse, going right through to the consumer. And the dream or the ideal, I guess, that we talk about in the use cases at the back of the pack is you have a situation where you could be a consumer in China or in Singapore or the United Arab Emirates, somewhere like that. And literally you have a QR code or something, some pointer to the data, and you combine that with something like augmented reality or virtual reality, and you can literally stand in the field or in the region that the cow came from. Or you could speak to the farmer virtually, something like that. That's where you could get to. So what does it allow? Just to finish up here. So it allows value transfer. You can move value across the network. As we said earlier on, it's not just the movement of data. You can move value in this new internet. It's immutable and it has a full audit trail. Gives us a headache, Deloitte, big accountants, right? If you have a full immutable audit trail, you know, how does our role change in the future? Smart contracts I'll come back to last. Data storage, disintermediation. If you're moving value between each other on this, what's the role of a bank in the future? What's the role of any intermediary who's taking value out of a process? So think about the reinvention of the value chains. Another one is in terms of cattle marts. you know, you could have a situation where actually you don't need a cattlemat because you have so much data on a farmer's animals, you just buy them directly from him, you move value across the network, and that's it done. And then decentralized. It is fully decentralized. There is no single honeypot. The last one I wanted to talk about was just smart contracts. Smart contracts is effectively putting workflow or putting the distribution of workflow into the blockchain. A really good example is if you had a blockchain for a farm talking to a blockchain for insurance, and they do talk to each other, you could have a situation where you might connect that to another node, maybe the meteorological service, and you could write a smart contract. You pay us $100, we'll give you rain coverage or temperature coverage for the next year. If the rainfall goes below 5 millimeters, over a prolonged period of maybe 28 days, you get a payout, and it automatically pays out. Insurance companies won't take on those small claims today, or those small insurance products, microinsurance they call it. Why? Because the claims process is so costly to do. But here you could do it very effectively and very cheaply. So with that, I'm going to just hand over to Joe. As I say, we're launching the paper. Joe's just going to take us through the document, and then we're going to come back to just have the panel at the end.
So just, I suppose, before I really kick into the paper and just run through the paper, I'll give a bit of background as to where, I suppose, the idea came from. And it was really around, I suppose, my background is in supply chain management, and then I suppose what Cillian was saying there, the cattle holding then in Mayo and being brought up around farms all my life. And I suppose when I met Cillian then, it was a perfect combination. He too has the interest and following and invested interest in I suppose the beef industry. So that led us thinking, I suppose, around Brexit and what's coming for the Irish beef industry. And we just got thinking around what could we do for the Irish industry in terms of what could blockchain do? Could it differentiate Ireland from its global competitors on the international market? So that led us thinking then around, I suppose, the international markets and how blockchain can enable that traceability. So within the paper, there's 6 different use cases that can be applicable and applied across the globe. They're not specific to the Irish industry, so it can be mapped across really any industry and for any country, any beef industry. So yesterday we were just touch back on what was said. I suppose with Tara McCarthy, there was a big emphasis on around the need for greater collaboration across the supply chain. And that kind of aligns then with, I suppose, what the World Health Organization are saying at the moment, with around 600 million people falling ill due to food contamination a year. So as supply chains become more complex and they cross more international borders, they've called for that greater collaboration for regulators, consumers and retailers. And then it was also interesting then in the lunchtime session when I attended the Australian, US and Southern African session, and the Australian guys spoke about, I suppose, consumers' awareness and the concerns around, I suppose, the processing of and the slaughtering of animals, but also in the transportation of animals. So that kind of, why would blockchain enable any of that or help any of that? I suppose it's the ability to show that end-to-end visibility and to capture along the supply chain each point and what's happening within that, across the supply chain. So the paper that you have in front of you, it really touches on 6, I suppose, problems at the start around Brexit, regulation, complex supply chains, the dietary transitions, consumer trends, and I suppose then, most importantly then, big emphasis on sustainability. It then pushes on into, I suppose, the different use cases which we have here. So one there that I touched on, end-to-end traceability. Then to be able to improve the grass-fed assurance, the animals that are fed 100%. If you're marketing around, I suppose, your grass-fed nature of the animals, it's the ability to prove that. So to capture the data points on the farm level that these animals are in fact grass-fed. The ability around trade financing. So that's basically improving the order to delivery process from trade financing. So it's removing the manual processes and paperwork that's currently required to get through port clearance and customs clearance. So if we could be able to have all these documents, and the great thing about it is if let's say we were to create a full end-to-end supply chain within the beef industry, And then we'll go along to a shipping company who also have a blockchain infrastructure built. The blockchains can talk to each other, so it's simply just a click in, a plug in, and then it's adding more value down along, so it's faster access to the market. Consumer engagement is a big one. I suppose that's the ability, I suppose, where we envisage it going is a customer going in, let's say in China, and picking up a steak and being able to scan with their smartphone device a QR code that'll bring up an image on their phone, I suppose, of all the information from the full farm all the way through to the retail, all the handling points, the transportation, the health plan of the animal, diet plan of the animal, the cuts of the carcass that have been made, and the animal well-being. You could also then have, I suppose, a video of a farmer giving a tour of his farm. And this could then touch upon, this is where the animals stay at winter, this is where the animals graze, this is the health plan that I have for the animal. So that just gives greater assurance then, I suppose, for the consumer. And then the feedback loop then that can also be enabled for that is consumers then can click on and just rate or give a feedback on the product. So then that could go, that information then is coming straight from the source and can be shared with all the participants within the ecosystem or participants within the blockchain. So then you've got greater information sharing and greater awareness of what the market wants. And then the other element then is around certification. So that's something we've done with a company called DMVGL who work in business assurance around supply chains, processes, products. It's similar to what they have certificates similar to what the ISO standards would be. So what they done was they put the certificates onto the blockchain to create greater trust and assurance in them. So what they found was it added greater value for their customers and then their customers' customers, so that they know that the certs are actually the validity of the certs. What we then, I suppose, go into in the paper is there's an interesting use case, and Rob Jennings here from Wyoming, he's a breath of fresh air really when you listen to him, but he's going to give great insight into how it is, how the challenges that he is experiencing, because they are doing this now in Wyoming. They're trying to differentiate the grass-fed nature of their beef and how it's different to, I suppose, the whole of the United States. Last few seconds, I suppose, it goes through everything from all the way down through to ownership, the use cases, challenges, and I suppose the next steps in how this can be actually progressed. So I'm not going to delay any further. I suppose the main objective is to have the panel discussion, and please do any questions. I believe the app is open, or we can open the floor to questions. Thanks.
So with that, thanks Joe. So with that, we're going to welcome Aoife Connaughton, Rob Jennings and John Colreavy up to the stage. So thanks folks. So maybe just very quickly, if we just do a quick introduction. So Rob, do you just want to give kind of 10 seconds, 20 seconds on who you are and where you've come from?
Yeah, sure. Excuse me. My name is Rob Jennings. I'm from Cheyenne, Wyoming. I am the CEO of a startup company called Beefchain. And we are also actually starting sheep chain now with the Mountain States Lamb Cooperative. And I'm here to promote Wyoming and the American rancher.
Aoife?
So I'm Aoife Connaughton. I'm a senior manager in Deloitte in Dublin, and I work with our disruptive technologies. And my background is around food and drink supply chain collaboration, and mostly around kind of peer-to-peer collaboration and using technology to help that.
And John?
Good morning. My name is John Colreavy. I'm the Director of Meat Technology Ireland. And just to explain what Meat Technology Ireland is, it's a consortium of the beef and sheep industry in Ireland who've written and defined and launched a 5-year research programme in beef. It's unique in the Northern Hemisphere, in beef and sheep meat in particular, and it's the first time the industry has come together with a strategic long-term view in terms of innovation. Yeah. And of course today falls into the context of that in terms of innovation.
Absolutely. So Aoife, maybe just from the kind of the sustainability perspective, you obviously helped to write the paper without giving too much away because we want people to read it. But what were the kind of the key features of blockchain that you saw, we'll say, compared to traditional technologies in industry, and where do you see the benefits, I suppose, coming from?
I suppose first and foremost, the thing you see is that, companies are doing so much from a sustainability point of view, but sustainability and traceability go hand in hand, and to get the full value out of your sustainability programs, you need traceability to be able to back that up. And I think when you're able to bring the two together in a way that's efficient, that translates directly into market share and premium, and that's where the value is. And I think when you look at this, like, from a sustainability point of view, it is a really, really complex ecosystem, and it is, if you're a producer or a supplier and you're on the value chain, it is relatively complex. So you might be a producer who's signed up to kind of 4 or 5 different retailers, code of conducts or audit processes. You may be an Origin Green member. You may be part of Origin Green's traceability program. You might also be using something like EcoVadis or EcoVeritas to work with smaller suppliers or to work with different suppliers. So you basically have this sea of verifications and certifications and basically badges around sustainability. What blockchain can do is basically be able to bring them efficiently into a place where whoever you want to see those things can see those things. But what it can also do, which I think is nearly the more exciting bit, is that, you know, we talked about this disintermediation, like taking out the middleman. You have a lot of other data. You might have satellite imagery, you might have GPS data. You can essentially choose what data of that you want to put on that essentially helps your story, helps give you a better sustainability credentials or traceability credentials. And by being able to take out the middleman, there's efficiency there. You're saving costs, you're saving duplication, you're saving kind of the audit cost of doing that. But essentially, if you have as much data as you want to put up there, up on the chain, essentially it's efficient. Because I suppose the other point is the kind of perfect nightmare storm of Venn diagrams in your end kind of consumers or retailers, in that it's very unusual for 2 retailers to actually want the same 7 badges that you might have. You know, they might have their own bespoke auditing system. They may have a bunch of other things as well. And what you can do here is do it all in one way, in one place, so that a particular retailer, for example, can just take a cut of that, say, right, here's the 7 things I want. I see that you have 20 things. Great. That's all I need to do. I don't need to send my audit team out to you because these things are proven, they're immutable, we're really sure of it. And actually, you can really triangulate them against each other and really prove that what you say is what you want. So essentially, you're creating efficiency into an area that traditionally has been relatively inefficient because of, I think what it comes down to is basically materiality. Everyone has their own, you know, as they should, their own material issues that are key to them in sustainability. And with something like this, you're able to say, well, this is material to me, here's why I care about this, and great, you have those 5 things that I really care about and that my consumers care about. We can move on, I can give you a premium, I can do business with you, and that's the way forward.
So Rob, taking all that into account, why did you set up and why did you go about the beef initiative and the Beefchain initiative in Wyoming? What was the key thing?
Sure. As some of you may know, Wyoming is a pioneer in blockchain laws. I got into it because of my use of the limited liability companies. And what I saw in blockchain was the ability to streamline business processes through digital signatures and electronic records and things of that nature. So after we passed the blockchain laws in Wyoming, we sat around and said, okay, now what? And what is a use case in Wyoming that we can demonstrate? Supply chain is obvious with blockchain, and then cattle. And the issue in Wyoming is that we are raising our animals in ethical manner, grass-fed, low stress. We let cows be cows. They spend their time out on the range. But as soon as they get to the sale barn, the feedlot, and the processor, all of that is lost. All of that effort put out by our ranchers is now mixed in with commodity beef, where somebody else is maybe not using those same practices, and the Wyoming rancher is being paid the same price as the guy who's not using those kind of practices. So the big issue in Wyoming is, how do we gain value for our ranchers? How do our ranchers make more money? And really, our story, there's 2 people I care about in this supply chain. I care about the rancher and I care about the consumer. Those are the 2 most important people in the process to us. So blockchain was really a sort of a perfect storm that we could use as a use case. And it's really been wonderful. We have 7 ranches right now. It's about 1,600 head tagged. And next year we hope to tag 50,000 head. And we're currently working with the IBM Food Trust Network. We're the only live animal pilot project on the IBM Food Trust Network, and we also have a private blockchain on Ethereum. So for us, really what it's about is telling the story of the rancher. Now, I'm not asking the rancher to change his methodology. All I want to do is collect the data points of his methodology and display that moving forward. When you do that, you create a marketplace, or you begin to create a marketplace where consumers, wholesale buyers, retailers can start picking and choosing animals that meet their desires, if you will, grass-fed, non-hormone, all-natural, whatever that may be. And I would say to that, and I think all of you realize that in this room, that organic, grass-fed, all-natural have become terms that are essentially meaningless, because there are so many players out in the marketplace using these terms that the consumer really doesn't know what that means. Go ask a consumer what grass-fed means. They don't know. They might tell you, they think it lives out in your yard, eating grass in your backyard all year, and then it moseys into the pasture and ends up on their plate. So what we want to do is we want to verify all of these claims by data points. And the best way to do that is through an immutable blockchain. And so it's our goal really to capture that value for the Wyoming rancher.
So John, so absolutely, Rob. So John, I guess with that in mind, right, we're hearing terms like disintermediation, changes in value chains. You're in a privileged position in that you sit with technology, but you also sit with processes as well as the industry around it. What are the concerns? What are the challenges? What are the unknowns, I suppose, that you almost need to overcome to bring industry, or we need to bring industry on that journey?
So I'm glad you said unknowns, because of anyone on the panel, I'm the most likely one to be a fraud in terms of understanding blockchain. So I'm relatively new, introduced to it by Deloitte. And I'll just give you a perspective as to what I see. So blockchain, if we could start with, as you can see, I was in hospital 3 weeks ago, getting a minor break in my hand taken care of. And I had 8 people get the same information from me in the hospital every time I went through the system. We heard the Ministry yesterday add to the budget an additional significant amount to the cost of running our health service, and it's the largest spend, over 15 billion of our spend. So that's where you start. Looking at food, again, in terms of being something of a fraud, I'm a blow-in in the mid-2012 into food, and it came out of different sectors where the supply chain is much more predictable and much more streamlined, push-pull to make it streamlined. So in agri it's quite different. So in beef, for example, just start with the fact we have 90,000 families supplying into the beef system. What we do have is the motivation for Meat Technology Ireland in having an interest in blockchain is we have a lot of very interesting data that consumers should get to know about, and organisations that drive sustainability should get to know about in terms of our capability. We're also selfish in that there's things that we'd like to have. So in terms of data that we have, we're in a privileged position as an island in having the largest genetics database on the planet. We've invested significantly in that. The first paper we published out of Meat Technology Ireland was to say if you select a 5-star NTI indexed animal, you can finish that animal 45 days earlier, 80 kilos heavier. So everybody around the world is feeding grain or grass into animals. It's going on as back fat, what knows, but no one really understands exactly what the retailer is trying to sell as to what that does. So we have a very good handle on that, and we'd like not to just hide it inside our factories or in academic conferences. We'd like to be able to tell people we can do that. So what we'd like back is, we'd like the consumer to tell us things. So particularly on sensory and genetics around sensory, it's quite complex and very expensive to get good sensory experiential data, and we have a lot of consumers. If we could tap into that, that will drive our genetics programs in terms of what the consumers are telling us. So that's just I see your screen is going red there, so that's just a snapshot overview. Yeah.
So I guess one of the things that so through all the research that we did, we talked to different organisations, we picked up the phone and stuff like that. One of the very interesting points we got was from some of the Chinese retailers. They told us they would gladly pay a 25 to 30% premium for full traceability if we could give them an app to be able to do that. They said they do that on the basis that Chinese families are typically small. They have 1, maybe 2 children, and they always want to give them the best. So that was one of the insights. The second insight I guess we got was from the farmers themselves. So even talking to my brother-in-law, he said, the sad thing about my farm is, he said, I don't know where things go. He said, I produce milk, I produce beef. I don't know if that beef is going to Aldi and Lidl in Kilkenny for €5 a steak, or if it's going to Singapore or Shanghai for €90 a steak. Same he said with my milk. He said, is that going into whey protein? Is it going into instant milk formula? Or is it going into table milk? Now, it's probably not going to table milk where he is in the country. But he said, I'd love to be able to see the value in that. So I said, well, would you go to value-based pricing? I said, let's just say, that was the case and you could get a share. I said, would you be happy to take a share on the price if the consumer was happy in China on the basis of the beef? And he said, yeah, he said, it's interesting. He said, we could look at different economic models. So I guess that's probably part of it, Rob. I mean, in terms of the economic models, what are you seeing? I know obviously feedlots are a big piece in the States, you know, the finishing and all that. Have you thought about the disintermediation, almost a new cooperative movement of actually ranchers coming together to do something like that on their own?
Yeah, and I think that's what I call it a cooperative technology share. And, you know, in Wyoming, if you come from the government and say, I'm here to mandate something on you, you're pretty much going to get a gun in your face and they're going to say, get off my property. So if we're talking, and I will tell you this too, if you come and say, I'm from the Global Roundtable, you might get that same gun in your face, right? So there's a mistrust of big institutions amongst the ranchers. These are independent folks. So what we're trying to do is create a grassroots up cooperative technology share where the small and medium-sized ranchers can participate in this and gain that value. And then through smart contracts, you can also receive certificates for doing great things. So the things that you might already be doing as a rancher might qualify for a sustainability badge or a grass-fed badge or certain other certificates or even USDA certificates. And now when we create that marketplace and these third-party folks come in with verifiable claims and ranchers can see the value in following sustainable methodologies, then they might start adopting these new protocols, or they might be rewarded. And how do you know how to reward them? I was talking to an energy company lady here, and they're doing regenerative rewards and things of that nature. Well, the best way to reward people is when you have hard data and you know that that's exactly what they're doing, that they're meeting those data points. So you literally could have thousands of protocols, if you will, that could be sort of automated. When those data points are met, they get that certificate. I would add that the IBM Food Trust Network actually has created a digital wallet to store all of those certificates in. So it's easier to adopt methodologies, it's easier to see value in using these methodologies, and I think you will have greater adoption of sustainable practices and other grass-fed or this practice, non-hormone, whatever it may be, if we make it easier for the rancher. We need to make it seamless for them. Yeah. And really what we're talking about doing is onboarding data. Yeah. And that's what we see in this is the onboarding of
data. And again, one of the points to raise is that this is just a digital technology. This is another technology. And that doesn't mean that it exists on its own. So this can be linked with sensor data, Internet of Things data, so IoT data. You can combine it with artificial intelligence, machine learning. You can start mining all the data pools because now it's standardized, it's normalized, it's in the same structure. The other thing that we can do is we can trade value across the network. So one of the things, Aoife, that there's definitely talk about is the carbon footprint, and the carbon, actually trading carbon credits on the blockchain, because you know that Rob is producing them, he's only using so much water on his ranch, he's generating electricity through turbines, and then you can use that to pass it off to the meat industry or something like that. So that's another piece.
Yeah, absolutely.
Yeah, and then John, I suppose from your perspective, what would it take to start getting deeper into the conversation? I mean, with industry, is this about education now at this stage? You know, is it these sessions that are going to help it? Is it pilots? Is it people just doing stuff and getting going? What gives that level of comfort and overcoming those unknowns?
Yeah, so it is a relatively recent discussion. Mm-hmm. I think we have to put it in the context of the information and traceability. In Ireland, we have pretty good, well-established systems that are regulatory, and that's where they sit, so that's who sees them. And we have gaps in our supply chain in terms of the connectivity of the chain. So I think the discussion has to really start around what is it that we want to do first, and I've declared I want to tell everyone what we can do genetically, but I really want to know what consumers are thinking. Yeah. So I think maybe that's important as to what to work on first, not to replicate what we do very well, not put everything up, but to get some early wins to show people the power of rapid decision making and value.
And that's a great point. So what we would say to any client who comes to the blockchain lab where we do all our work in Dublin is start small. Like start so small it's tiny, but think really big. Think about the future and think about what that means, but then bring it down to the small pieces. And we would say focus on 3 areas. The first is minimum viable ecosystem. Okay, so the blockchain is a network. It's a network technology. You can't have your own blockchain, right? It doesn't work. So think about who is the minimum viable ecosystem. So if you were creating a beef chain or a dairy chain or whatever it is, what are the nodes, what are those participants in it that you would need to have around the table to make that blockchain operative? The second piece is within that, what's the minimum viable process? So what is the process that you want to manage through that network? And the third piece, and probably the most important, is what's the minimum viable data? So what is the data you're going to capture? So we did this the other day in the lab. We had about 11 participants in from the dairy industry here in Ireland. And we were looking at the ability to prove grass-fed and the grass-fed nature of Irish dairy products. We got it down to 4 ecosystem participants with 8 data lines. And we thought with those 8 data lines we could actually solve it, and the process then has to be put around those. So as I say, it's that really, really small. I'm just wondering if there's any questions come through. Have we had questions? Yeah? Fantastic. We can pass some of these to the panel.
Yeah, so this is probably a clarification of something you've just been talking about, but what process is in place to validate the data a Wyoming rancher provides into the blockchain and make sure that it's accurate and there's no false claims going in?
Yeah, sure. I mean, we've started our pilot project small. We have the 1,600 head tag. We're using RFID tags. And the beauty of using cattle in a blockchain demo is that you're talking about big data points, right? So when the tag goes in, you're scanning the tag, you're collecting the geolocation, heifer steer, the vaccination, and some of those big data points. And then, of course, we're cow-calf operations, so then the calves are out in the pasture for 8 months or longer. So really that's where we're at right now. They'll be tagged again or scanned again when they're transported. So currently we're just using big data points. But what I would like to see us move to long term, I think the next step is UHF tags. And then beyond UHF tags, we get into tags that are reading health data that are feeding into a 5G network or a low power, like a Sigfox or a low-rod network, that you're streaming that constant data. What I would eventually like is for constant data from those animals to be streaming into the cloud. But right now we're just focusing on large data points that can be verifiable. We're also working with the USDA right now on getting our certifications for all natural, non-hormone, agent source, and what's called Wyoming Plus. So those certifications will have to meet USDA standards. And I should also add the beauty of where we're at right now in this space is we are working also with the USDA to help create an audit system on the blockchain that will create better verification of these data points and maybe less time in the field for auditors.
So we talked about this as well the other day. So with the dairy people, and they said you could have triangulation. So you could write a smart contract, and that smart contract could look at 3 things. The first is a collar or a tag on the animal itself, so to look at the RFID, the location. The second could be the feed machines. So if a feed machine is running, you know that the grass or the cows are probably in the sheds, right? It's that time of year that silage is in, the bulk feed is being used. And the third thing is actually satellite imagery. A lot of companies now are starting to be able to provide satellite imagery at very low cost. So actually, could you prove grass-fed by just the fact that cows are out on grass, we have a picture, and we can store that picture into the blockchain as well, so you can do that. So lots of ways you can do it. Any other questions? I'm conscious of time as well.
Yeah, we're almost out of time, but this one more question is, what's your experience regarding the level of understanding of blockchain in the corporate environment? And you know, obviously this is a beginning for this group, but are you doing these things with lots of other groups?
Yeah, so I can give maybe 2 perspectives. So the first one is just the experience of going in to meet corporate organizations. We started talking about blockchain to companies in about 2014, 2015. I think people thought I was crazy or I was mental, one or the other. We would go in and it was literally like rocket science to people, just didn't understand it. Now when people come into the lab, we would ask the question as well at sessions like this, how many people have heard of blockchain? No hands would go up. How many people have heard of Bitcoin? Maybe 3 or 4 hands would go up. You go into a session now and you ask the same, all the hands are up, because everybody's heard it, at least it's been known. The second thing I would say is the rate of spend we're seeing in blockchain has completely changed. So we would have customers coming to us 3-4 years ago and they'd say, we need to know about blockchain, we need to learn about blockchain. Now they're coming to us and they're saying, we have a use case, we know how it needs to work, we've worked out who the participants in the network need to be, we need to build it. So the dialogue has completely changed, and I would actually say that a lot of people are a lot further ahead. But then there's other sides of the coin, which is those old CEOs and older COOs, they're 3 to 4 years from retirement, they don't really want to rock the boat because this is going to change the value chain, so why bother? So I think there's that side as well. The thing I would say is get ahead of it before you cop behind it, because if you cop behind it, you could be disintermediated.
Yeah, I do want to say one thing, and I know we have to go, but as I see blockchain, I see it as an aggregator, and I see it minimally as an aggregator of this conversation. So how do we take all this disparate information that's out there, all this traceability and sustainability and all these different things that are sort of floating out in space, how do we put them on one highway and make them manageable? And that's really what we need to do. And I think that's the beauty of blockchain. Maybe blockchain is a magic pixie dust right now. 10 years, it might be something else. But today, it's an aggregator of this conversation. And I think that's the important part, is particularly in what we're doing. I'm able to sit around a table and bring computer nerds and cowboys and bankers and corporate guys and whatever all to the same table to try and solve a problem. And that's something that has really probably not been done a lot. And I would encourage you folks all, reach outside of your industry to start finding solutions to these problems. And that's where I'm at with blockchain, is it's become that conversation, that innovation, that place of change. And that's what's attractive to us.
Absolutely. I couldn't have summed it up better than myself. So with that, I know we're out of time, but I want to thank my panelists. So John Colreavy from Meat Ireland, Aoife Connaughton, and Rob from Wyoming, but also Beefchain.
Yeah, Rob at beefchain.com if anybody wants to talk.
Brilliant.
I will talk blockchain all day long. Don't get me started.
So I'd also like to thank Deloitte for putting this on. It's been very informative, certainly for me. I was complete ignoramus as far as this was concerned, so thank you for the introduction, and I'm sure that we'll be learning a lot more from you here and in the future. Thank you very much.
Thank you, folks.